What's up, guys? Good morning. Happy Friday. It is Pharaoh Friday today. We're going to try to finish out the week strong. Market is, of course, open, and we're getting we had a little bit of a fade into the open, and now we're getting an attempt at a push off the open. We'll see what we can do with that. Again, I'm thinking range. However, if we look, at the top monitor here, you look at the bottom of your screen, though, market's attempting a breakout. We've seen a lot of this as of late. We get attempts at breakouts and then they slow down, turn back into ranges. So, if we were going to take bets, I'd probably say that's what's more than likely happening. But I have to be open-minded to the idea that, hey, maybe the market actually does break out, push up to 23, 24, maybe to 25. Of course, I'm not going to trade on the hope that that does occur. We'll just trade the price action as it comes. But I'm hesitant of big trends. Though, yesterday afternoon, we did catch a decent trend. That trend actually got me back to green yesterday on the day. We'll see what we can do today. How you guys doing? What's up? Good morning. All right, we got 55 seconds left here on this 5-minute bar. Again, I'm open to also trading the 2-minute here today. I'm going to put my head down and scalp, at least for the morning. Let's see what we can put together here, huh? Lee, good morning. Marshall, James, Eric, how we doing? All right. 20 seconds left here. If we get a nice clean close, we are pushing outside of the range, of course. However, if we get a nice clean close, I'm going to have to slap something on here. Ooh, look at that. That's not all that clean, is it? Wick back on the close, and then a big pop through. You hit a market buy on that, you get filled up at 22,779. Gotta hold off for now. 2-minute, of course, keeping an eye on the 2-minute. That was a 5-minute we were just looking at. Got a minute 39 left here on the 2. Open to trading the 2. Especially with a scalping mentality. So, by the way, same deal here at 9 o'clock. We just got the University of Michigan final. Okay, it's not the prelim, all right, but it's the final read. The final read tends to be a little bit less dramatic than the prelim. So, they are, I believe, 2 weeks apart. We get both every month. And, again, today is the less important read, though still worth paying attention to, the University of Michigan sentiment final. That came in at 60.7. The forecast was 60.5, which was also the previous 60.5. All that is the kind of finalized, adjusted version of their preliminary read that came out, I believe 2 weeks ago it came out. So from here through the rest of the day, we're pretty free of scheduled news. Trump is speaking at 2 o'clock Central. That's about it. Taz, good morning. Gotta say, it's been a nice switch here, though. Looking at the daily, I mean, finally breaking out of that range, at least attempting to. See if we can get some big bull bodies on the daily, at least. Kind of more continuation like we saw in these 2 days. The 23rd, the 24th. I think slowing down a tad here. I'm a little concerned it turns into this, like we saw back here. But at the end of the day, as long as the volatility is decent, I don't care which direction it's going. Including sideways, by the way. Again, as long as volatility is decent. Unfortunately, in a lot of sideways channels, you can kill volatility for a few days, or weeks, or months, like we've been seeing. Okay, we got about 2 minutes left here. 10 seconds, 2 minutes, 10 seconds on this 5-minute bar. Got about a minute on the 2-minute chart. The 2-minute itself is kind of slowing down, you can see, after a big bull body, struggling to even turn this bar green on the 2, top right of your screen. 5 minutes on the top left. Tell you guys what. Let's start nice and early today so we can get there. You get the stream to 300 viewers. Likes. I guess the chat. Just being active in the chat is probably best. I don't know. I don't work for YouTube. 300 viewers on the stream, which we've hit before plenty of times. And I'll give away, to round out the week, a free 50K Take Profit Trader test account. Take Profit is the one where, you know, you get over the buffer, you can take daily payouts. It's a great way to generate revenue while you're scaling. And we'll give that test account away for free. All right, 27 seconds. $15 seconds. Let's see if we can get a nice clean close here out of the bulls. Clean for me would be ideally above like 792-ish. There it is. And I will get long. I'll risk the signal bar. I'll show you here in a second my position. There you go. That's how we sit. Long for a little scout mentality. See if we can get a bit more follow through here before the range on the day, which I expect is coming, sets in. Come on, Bulls, get us up through 810. Let that set up there for now. I'll drive manually if I need to. Hotkeys. 14 points in the money. See if we can push through a 10 here. Yeah, I'll pull it at 13. All right. All right, 1,700 bucks in the bag. Let's move on. All right, that big, I gotta tell you, that big 5-minute bar with the massive wick back downside, I mean, I essentially top-ticked the sell on that scalp, so I'm gonna hold off for now. More watch the 2-minute. I think we're probably gonna enter a trading range here. There you go, this bar already trying to turn red here. We'll see if the bulls can, kind of strong arm the bears, or if the bears are actually going to step in and turn this into a trading range, which I anticipate is probable. So I don't want to be going long for continuation, at least not the way that this bar is currently looking. I'm open to reversals though more than likely we enter a trading range here before we get either a second leg or a pullback. Eric, Nico, were you not worried about the big 800 level? I know it's not a tier 1, but it's near an all-time high. People are always terrified of all-time highs, man. And listen, unless we're making a test of it, like at, let's say the all-time high is, you know, we rejected hard off 23,000, for example, 4 times. It's like a test of it getting long at, you know, 22,995. You should probably think about that, though. The way that I would think about that is if we do see a pop through, it's going to rip probably 20, 30, 40, 50 points, and I can keep the risk 15 points. So I'd probably still take that trade, to be honest with you. But no, people are terrified of the aspect of in a market that's not necessarily aggressively ranging anymore. I mean, right now we are trying to break out. Look at the daily chart, right? Context is important. In a super tight range market, I would not do this. But in a market that's not aggressively ranging hard as hell, I'll take that trade. People are terrified of the buy high, sell higher mentality, or the sell low, buy back lower mentality. But not every market is just a sideways range, right? I mean, ideally, you know, we'd be trading in environments that aren't that most of the time, though most of the time they are going to be relatively calm. Look, I mean, I feel like this is a huge thing that the entire trading world on the internet misses. This isn't about a setup. This isn't about trade this one setup a day to make a living. It's like you're doing nothing by watching that video. You're not getting anything done. It's entertainment at best. The reality here is you find setups that seem to have edge for you, and then you apply them in markets where it makes sense to apply them. You don't trade a range breakout in a range market. because 80 to 90% of the time plus it's just going to reverse and your reward risk is not going to make up for it. The same way you don't take big buy the close trend trades in a range market. The probability of the trend continuing is smaller than average. And on average, it's already small to begin with. Dan, I don't know what you're talking about, brother. Unless you're colorblind, the number is green, man. I don't think I've ever lost a trade in my life. Yeah, NQ broke its high. All right, so clearly, you can see you're entering a range. Scott, when you're trading the buffer zone on Take Profit Trader, in a pro account, he's saying, do you use the same mentality as the eval, going a little bigger to get through the initial mark, to get the paydays quicker, or do you take your time? Personally, I just traded normal. I don't, maybe you could treat it like an eval, but the problem is, it's no longer an eval. You're now over that buffer, and I kind of prefer personally to just get to the finish line and, maybe if you wanted to size up a little bit, but not as much as in an eval, to get to the buffer zone quicker so you can take daily payouts. Again, model your business model in a way that you think makes sense, where the numbers make sense for you. A reset on a 150K Take Profit Trader account is, I think it's $1,500. So, I mean, it's not super cheap, but if that number works for you, where you're taking payouts that, are a factor more than that consistently, then you can afford to trade a little bit bigger to get over the buffer, even if you're just resetting the account for $1,500 each time. But I mean, listen, the little nuance, do you trade 3 or 4? Just run some numbers, figure out, okay, what's kind of my data? What's the probability of going on a certain size losing streak based on my data, which you can do at a website called coda.io. It's free. I have no idea who developed the website, but it's a good tool. Figure out what the probability is of going on a certain losing streak, and then pick something you're comfortable with as far as how big you trade. That tells you the probability of blowing up an account in a certain sample size, by the way. And I'm just going to be straight up. If you have no idea what I'm saying, then you need to learn what I'm saying. Otherwise, your trading is not going to work for you. And if you have no idea what I'm saying and you have no care to learn what I'm saying, then you're here for fun. And you should treat it like the casino you're already treating it like. But you shouldn't expect to like walk away from this wealthy if that's how you're going to treat it. If you refuse to even understand stats. Just be real with yourself. Are you here to make a lot of money and provide for your family and potentially develop generational wealth in a family that's never had that, or are you here for fun? Just be straight up with yourself. And a lot of people are lying. They're lying to their ass. I saw this 4 years ago. A lot of people were here for fun, and they would pretend like they're here. I'm serious about this. You know, I'm really putting the work in. And then they'd get up at 11 a.m. and check their Robinhood account and be like, oh shit, it's red. You'll enjoy this a lot more if you're serious about your intentions here, I think. All right, in a trading range, like we talked about maybe 15 minutes ago here, we have now entered that trading range. You can see it very well in the 2-minute chart here. Very common when you get a tight push. We've been seeing this 3-4 days a week for the last 2 or 3 weeks now. You get a tight push upside trading range. Then you'll say, well, what happens next? It's been kind of up in the air what happens next as of late. You just kind of got to let it break and then trade the break. All right, here we go. Testing the near end of that channel to the upside. Again, the outskirts of these channels, they're always going to be ranges, never exact levels. So if you're going to trade the outskirts of the channel with reversion, you got to give it a little bit more room. You can't be giving it 3 points. You're just going to get chopped out, man. And that, honestly, that's not fun. It's not fun at all to have a big red day when you're just getting chopped up all day. That's one of the worst ways to have a big red day. Arguably worse than just taking a single big loss. Yeah, you know, Joe, I think Joe has maybe been at this for a little while at this point, because let me explain something. You don't want to just risk a lot for the sake of risking a lot. It still has to make sense as far as, you know, what's your expected probability, and then what makes sense to risk. I wouldn't just go out risking 300 points in a market like this, but if you take a trade and you know, mate, you're like, shit, it really makes sense to risk about 90 points on this thing. Well, how much can you get? I think I can get maybe 80, 90 points, maybe 100 points. Like, okay, well, what do you think the probability is? 65%. Man, you got to put it on. That's expected value right there. You just identified it, and now you're too scared to put it on. A big sign of maturity, by the way, in trading that a lot of people come to this conclusion eventually is, let me put it this way. A huge sign of immaturity in trading is risking 5 points. Because they feel the need to trade big for their ego, but they don't want to risk a lot of money, so they just tighten the stop. Now, you might see me risk 10, 15 points in a lower volatility environment on a scalp sometimes. If it makes sense, that's fine. But like off the open, man, if you're taking trades and you're like, I'm going to risk 6 points, it's like, come on, like you're going to get chopped up. The probability is awful. It's just horrible. And why is it so mature? Because you're letting the thing breathe, like Joe says, and you're trading smaller because you're giving it more room. Now, it doesn't mean you're no longer a scalper, by the way, but I do think you should do both. Take your quick hitters, risking 15, 20, 25, 30, 40, maybe sometimes like 11 points in some cases, some lower volatility environments. And then, hey, if a swing comes along where it's like, yeah, there's about 120 points of potential upside here. The risk on this is maybe 90 points, 95 points. Probability, I think, is about 55, 60%. You got to put it on, man. All right, we are I would say about 20 points out from that 20 EMA on the 5, which interestingly 140 in the range. So you get about a 70-point pullback down to about 750. Yeah, this here to here. Wow, more like here to here. About 740 to 760 currently is about the 50% retracement zone. And the 20 EMA and the 5-minute just happens to kind of be in the right top end of that zone. So if this closed here, I would love to get short. Can't justify it. We saw a similar thing yesterday, and that 50% retracement ended up being very strong. What does that mean, by the way? Is it just a magic number because it's 50%? Well, no. Think about it. We've talked about this before, right? A lot of shorts are going to be averaging in on this move, especially up here. A lot of shorts averaging in, not willing to cut it yet because they're thinking, yeah, the market may look like it's breaking out the last 3, 4, 5 days, but I don't think it is. This is still a range market. And they hold. Where's their average now? Assuming they started the position kind of down here. Their average is somewhere between here and maybe here. You know, maybe it creeps a little bit higher as you get more averaging on this strong move higher. So maybe 740, 750 up to about 770-ish is going to be where a lot of those averages are. And what do they do when they get to the average after they were deep in the red? They buy to close at break even because they're emotional. Right? Most traders are very emotional. So think about what they're going to do based on their emotions, based on the kind of expected position that a lot of traders are going to be in on a move like this. A lot of shorts, average in shorts, going to be red. What are they going to do as soon as they no longer see big red and they see break even or close to it? Probably buy it back at break even. What does that do? That's buying pressure. Sometimes that's enough to reverse it, or at least give the existing bulls that are flat enough confidence to get long, which is more buying pressure. So I don't say like, well, you should just get long at the 50% retracement blindly. That's not what I'm saying. What I'm saying is I would love to get short if this bar closed in a clean manner in about 1:35 seconds. But there's too many things in the way, potentially. What's up, Gaines? How we doing? Okay, so if you're just joining us, we are one scalp into the day here so far. I'm relatively interested if we can get a decent, kind of a decent candlestick sequence here. I'm interested in going long on a push higher, betting that this ends up being a pullback in a intraday bullish trend. Getting a lot of small bear bodies. Those are not incredibly strong bear bars. But again, if you're just joining us, we're one scalp into the day so far. That's how we currently sit. Gonna see if we can hit our goal here. Yeah, Dominic, I'm right now looking at only the New York session on the daily chart. See here, the bears are coming into the 20 EMA on the 5 and also kind of the top end of that 50% retracement zone that we just talked so much about. I mean, you got to expect at least a little buying pressure here. Question is it enough to reverse? And if we do get a reversal sequence, I'd like to get long. But if we rip down through the 50% retracement zone and the 20 EMA, then I'm hitting short. All right, 1:15 left on this 5-minute bar. The 2-minute is just sideways here for the last few minutes. There's a 2-minute chart. With this 5-minute getting a lot of wicks back upside again. Gotta expect some bulls to be in this region for a variety of reasons. But if the bears can rip through all those orders and clear them out for the most part, I'd say down beneath maybe 750. If we could get a close on a 5-minute beneath 750, even a 2-minute if it would clean enough, I would get short. But a reversal bar or two here, and I'd be getting long. Looking to take out the high. What's up, Chris? Good morning. How we doing? Okay, so there's a couple of options here, right? I mean, I know, I think it confuses some people when I say, hey, if this happens, I'll go short, but if this happens, I'm going long, and it's not that big of a difference. Well, I'm looking at two different scenarios. So obviously this market right now, more than likely, will do one of two things. It'll either, as it has, pull back to around the 50% retracement zone, the 20 EMA and the 5 minute, and then bounce and re-enter either a sideways trading range up to here, right, and go sideways, or push through the high and maybe try to make a soft bull push, which would maintain a neutral or bullish trend. Okay, now scenario number two, in both those cases, there's upside here potentially. There's 2 minutes 40 seconds left here on this 5 minute bar, by the way. I'm watching this. Scenario number two is if we just take all this out and the bears take over and these wicks stop coming. Look at this. Look at this. Scenario number two might be out the window, huh? Either way, though, that could be a push downside and a close beneath 750. I'd be slapping short hard, looking to take out the low a day nearly, which would be a pretty damn big trade, maybe 60 points. But that scenario number two might be out the window here. We might just be entering either a neutral channel, relatively wide, maybe 50, 60 points wide from 760-ish to about 820. Or if we take out that high, then we're looking at maybe a soft bull trend, at least here in the morning. There's always at least two scenarios, arguably three. Look at this big bull bar though, huh? Man, with the size, I gotta say, with the size of this bull bar nearly covering the entire what could end up being range, right? If we end up kind of rejecting off 820, 830 and then pulling on back, entering a sideways range that does this kind of thing, right? Then all of a sudden the risk on a scalp here getting long on this rollover, if it closed up here, you're risking 50 points to potentially get rejected in 10. I don't know if the probability of break is high enough to justify me putting that on right now. All right, we got 15 seconds left here on both the 5 minute and the 2 minute bars. See how these roll over up top. Again, top left 5 minute, top right 2 minute. Ooh, is this slowly going to turn into a little descending channel, a soft descending channel before inevitably breaking downside? We need more information. EU headline here. EU and US are confident they'll reach tariff deal by the July deadline. Likely the headline causing that push. Well, Taz, I can't know the answer to that unless I look at your data, which is obviously, that's a one-on-one thing. But you're probably trading too big. You're scared, is the reality. I get it. You don't like to think of yourself as being scared, but that's probably what you are. Which means you need to size down until you take more trades and get more experience. If you were supposed to buy something that just happened anyway based on your plan. If you weren't supposed to buy it, then obviously you did the right thing. I gotta tell you, I think we stay in a trading range here, honestly. What's up, Tahoe? Day one. Day one of many. We are trading right now, technically MNQ. Right now I'm trading about 50, give or take, MNQ contracts. Copy trading across accounts. Okay, we're about halfway through this 5-minute bar. We got 2 minutes 35 seconds left here on this 5-minute bar. Too early to know for sure and make a decision, obviously, but if we saw this close down here, I'd get short for a smallish scalp, which press the downside of this channel. It would need to close pretty clean, though. We're going to put that on. Two minutes. Let's see what we can get. What's up, Keith? How we doing? Yeah, I mean, this is a 5-minute chart. The 2-minute gives you a pretty good look, honestly, of what's going on. Just barely that lower high. I'd almost call this a flat top at this point. Kind of remove this wick and look here. All right, 50 seconds here. Right now, I'd like to be able to get short, but it'd have to make sense for me. I need this bar to close in kind of a tight range, honestly, for me to hit that. Let's see if we can. We're pretty damn close. I want to see below 790, but above 785 here on the close. 5 seconds. Come on, Bears. Can't do it. Not there. Too big of a wick. Alvin, good to have you, brother. Carlos, what do you consider a tight range? I mean, well, it depends on the context of the market we're in, but just in general, if I'm like buy low, sell high scalping in a range, I'd say anything less than 30 points starts to get a little bit awkward. as far as structuring a trade that makes sense. But here we're at least 40, 50 points wide. Okay, here we go, coming into the 20 EMA. Alright, let's see if the bears break this lower. I gotta tell you, I think we're probably in a descending channel, so even if we get a big bear bar closing near the low, I gotta say, I think the probabilities... I'm gonna use the word probably a lot with you guys, assuming you understand what I mean, and as people are new, they'll just pick up on it. When I say probably, what I'm speaking in is, hey, the probability is better than 50%. I don't mean 98, I mean better than 50. So, if we see a big bear bar like this pressing, closing near the low, I think bulls probably step in. As I'm talking about it, we kind of just saw that happen. We get the wick back upside. You see that? Bulls wicking it back up 15, 20 points. Just because I think, probably what everyone's looking at here is, I don't like these aggressive levels, but something like this, you could argue this. You could also argue I hate drawing too many levels, but I'll do it for the sake of the stream. This, I'd probably make that argument a little bit more, right? Don't overthink these levels, just put it where it makes sense. This is what I think we're looking at. And it takes a lot to break an aggressive descending support like this. Though eventually it often does. But this is one of those things you pick up on with time, right? Like this big bear bar, if this was a flat bottom here, like if this bottom here looked less like this and more like something like this, if this closed down here, we would probably see a rollover and at least 20, 30, 40 points lower. In the case that we currently have though, which is this, the bears have to be really, really strong to push through this and then continue. Because you're getting buying pressure all the way down, people with this line drawn a little bit differently, right? Or thought of a little bit differently in their head, even if they don't have it drawn, which is fine. And right now, I think the market's a little too evenly matched considering we're in a trading range, right? What does that mean by design, or by default, I suppose? That the market's a little bit more evenly matched than it was here. That's how I think about it. Which to me is kind of the only way to think about it. Okay, Trump in 35 minutes, he says, I will hold an 11:30 Eastern Time news conference at the White House on Supreme Court rulings. So that is in, no matter your time zone, that is in 35 minutes from right now. You see the psychology at play? You see this? And just draw it where you think the average of everyone who looks at it would draw it if they had to draw it. You get a test, pull back up, close above the 20 EMA and the 5. I mean, there's no denying that people watch the EMAs. I think they're, in and of themselves, pretty useless. But they offer a self-fulfilling prophecy, so you gotta watch them. Here we go, the bear is getting excited. I can't join them until we see a pretty obvious break of that descending support. As much as I'd like to. You know, in fact, I want to have that line out to get more of a visual. Alright, 2 minute isn't really offering us much right now. Of course, right now we're looking at a 5 minute here on screen. Right, that should be about the test of volume weighted average price. If we could see it close pretty much right near the bottom of the descending channel. And then another bar that closes in a small bull bar near the high of the bar it closes. I would slap on a long as hard as I can and hold it at least, I'd say, until we see a back test of the 20 EMA. We got a little bit of a development here. Hmm. 30 seconds out from the close of this 5 minute bar. See if the bears can put something together. I know that they're getting excited here. I just don't, I can't join them yet. I don't see it yet. Yeah, bulls are going to hold it wicked back a bit here. There's the rollover. Here we go. Bears coming in for another test. Here's the 2 minute. I mean, right? Can we really deny that that's probably something bulls are looking at? You're seeing it, right? Wick back, wick back, wick back, wick back. Not enough for me to get long. Of course not, because, you know, if the bears step in and they're like, all right, you want to play? Let's take this lower to 730. Then I would get short. Though part of me wonders if this is kind of like a risk-off mentality before Trump at 11:30 here Eastern. Just my thoughts here. If we did see a push down to like 730 and a close, I'd sell that roll over 100%, looking for just a push lower, because this is just no man's land. There's not really much down here anymore. 50% retracement out of the way. Descending support out of the way. 20 EMA out of the way. But if in the next 2 minutes, see down here, 2 minutes left on this 5-minute bar, if we can get a close above this previous bar's wick, then I will. I'll buy for a push back up higher into the range. That's the idea. With a couple ideas. All right, there's the retest of the 20 EMA here on the 5-minute. We got a minute and 10 left on this 5-minute bar. Come on, give us a close we can do something on. We gotta get something here. I gotta see a close right above this. Come on, Bulls. 15 seconds. 5 more points. I gotta be picky here. It's very important for me to get what I need to buy this. Can't do it. No trade. Holding beneath the previous bar's wick high and beneath the 20 EMA. Gotta give it one more bar here. %, gains. 100%. All right. Coffee time. Be back in 2 minutes. Don't go anywhere. All right, we are back. And I gotta tell you, I'm watching this. You see the 5-minute chart top left. Actually, let me pull it up bigger for you. Shrinking bull bodies. Growing bear wicks on the top side. And now we have a bear body. 3 minutes and 15 seconds out from the close. It's a lot of time. But if we have a clean close here, I absolutely will get short if it's clean and in this general vicinity. All right, Bears, keep it low. Keep it below 65, but ideally don't dip it too much below 60 for me. I know it's a big ask, but that's kind of what I need right now to throw on this short in 1 minute and 35 seconds. I'd like to see it close between 60 and 65. I think below 65 for me is non-negotiable. 60 is a little bit more negotiable. Oh, all right, we got 1 minute 20 out. Come on, Bears. Do it to them. Yeah, Troutman, you worry about your trading. I'll worry about mine. "60 seconds out. Bull's taking it back higher. I don't know if we're going to get it, man. 22 seconds. Bull's trying to hold on to that 20 on the 5 here. I'll get ready just in case. Not there. No trade. Bull's too strong. Wicking it back higher. Holding on to that 20 at least for now. We're trying to. What's up, Bono? How we doing? Well, still where we sit here on the day. Still early, man, but we need something to put on. All right, we got 2 minutes, 20 seconds out on the 5-minute bar. We've got a minute and 15 seconds now on the 2-minute bar. The bear case here is now an ascending channel inside of the overarching bigger range. Like you can see it here, right? Well, actually, you couldn't because I didn't take the short. Now, that'd be fair game had I taken the short. Oh, we got 90 seconds out here. Okay, now we have to consider the bear case here is this. Okay, but if we see a close near the high of this bull bar here, above this wick high, then it's really a question of I probably need to get long for a scalp, risk this curl. I don't want to risk the whole curl, probably risk this curl. 30 seconds, see what we get for a close here out of the bulls. Eight seconds. Get long there. I'll risk this curl. And we'll see if we can get a push up toward through this wick high. And ideally up through here a bit. At least testing this. And then we're coming into a flat top. If this turns in, by the way, to being an ascending channel, then a little bit of heat is no big deal. If we break this, then for me, it's like, it's time to cut this. So this trade really kind of manages itself in a lot of ways. So let's see how that, oops, what did I just do? There we go. Okay, we're good. Yeah, Joe, that's what I'm looking at here. And the way that my risk is managed here, a break downside if it were to stop me out, then the ascending channel inside of the bigger channel, if you get what I mean here, like we end up seeing this ascending channel inside of this bigger range, kind of a wedge. If it stops me out, then this ascending channel in a lot of ways has kind of snapped up. So I'd want to be out regardless. So, trade makes sense for me. Now you just see if it works. Damn right, Chris. Gains, how do you determine your stop loss? For me, it's what's an area that makes, sometimes it has to be arbitrary, especially if you're trading in like a range, the outskirts of a range. It kind of has to be arbitrary in a way that makes sense for the potential reward. But when it's not arbitrary, I'm looking at what's an area that I can make sense of, where if this does snap up, my idea is out the window anyway, and it turns from a good idea to a hope idea. And for me, where I have my stop set right now is that area. Because the ascending channel has broken at that point, and I no longer need to be in. The idea has now changed. Roy, new full-time trader. Good work. What's up, Force? How we doing? Right now we're looking at the 5-minute on MNQ. Not a horrible close out of the Bulls. I mean, kind of a small body, but the close itself was all right. Not great, but all right. We'll see if we get some headlines, by the way, out of Trump, out of this press briefing. All right, I've got my eye on this here. Joe, stop hunt. Sorry, stop. That'll wake you up. Yeah, nothing that's gonna move our market. Another supersized oil output increase. No, I'm not looking to stop loss hunt up top because it's a flat top, and the wedge being the way that it is right now, I don't think it's an incredibly high probability that the flat top breaks on, it just happens to break on this test here. For me, that's not really what this bet is about. But you're right to think that. However, if it was less of an aggressive flat top, I would be looking to hunt stops up there. But in this case, I'm not looking to bet on this single test being the break. Not rich, man. Bunch of payouts. I mean, I don't like the standard, by the way, that everyone else likes to set, where everyone seems to think if you ever blow a prop account that, like, you suck. I mean, that's part of the business model, is even as a profitable trader, you're gonna sometimes have losing streaks that dip below the drawdown, right? Assuming you're taking regular payouts. So the way that I look at this is like, you just come up with what size you're comfortable trading with an average duration of how long you have each funded account, whether that's a period of weeks. I prefer to have them longer, a period of months usually on average, before you hit that losing streak on average. And then the venture is very profitable, right? It's not, don't look at this like, if I ever blow an account, I suck and I should quit. That's part of the business model. To never, ever, ever blow a funded account, you'd have to be trading so small, long term, that you almost never get to payouts. And I'm big on trading small, scaling horizontally, right? But I think being terrified of that because of an ego thing is not the way to do it. This can be extremely profitable, even if, you know, you're obviously not going to hold on to accounts for years at a time. Okay, by the way, so we're out there for a winner. So we're getting closer here to the daily goal. This is where we currently sit. There you go, Joe. Exactly. Vertical scaling is gonna kill you, man. Scale this thing horizontally. I mean, yeah, Faba, you know, evals are another thing entirely. The way that I look at this, I mean, look, don't approach evals like I'm a great trader. If I ever fail an eval, I suck. Don't do that. You're gonna spend weeks trading evals for the sake of ego, and it doesn't make sense. The opportunity cost is too high. Yeah, Fab, I know what you meant. But the opportunity cost is too high, man. Don't put your ego in how often you pass evals. What you should do, and what I do, is I write out, okay, my average expectation in terms of profit per funded account, the cost of evals, and what I'm looking for in terms of a profit margin on the prop trading venture in general. and it should be kind of a factor of like X of what you're actually spending. And then you're like, okay, I make tons of money if I pass 1 out of every 6 evals. And you're probably going to pass them a hell of a lot more often than 1 out of every 6. Okay, especially if they're like the 25 or 50Ks. Hang your hat on your return on your investment. Don't hang it on, oh, I blew 1 funded account, I suck. Or I traded 1 300K eval and I didn't pass it, wow, I suck. It's like, don't spend so much time in the evals because there's some ego. Just get through them at a rate that is very profitable for you after you run those numbers, and you're good to go. God, what a beautiful closer on the 5-minute though, huh? The problem really though is got this little flat top here. Again, that's why I took that off a little earlier than I might in another case, because we have a very clear flat top. I don't want to take the bet that this test is going to be the break. It might be. But I know bears are going to look at this. At least they're going to try to look at this. Damn. Out of nowhere with it. All right, here we go. Coming in for the test of that flat top. Let's see what happens here. Let's see if holding that trade would have paid big. Not that I would have either way. But let's see if this ends up being the break. If it does, then I got to think about getting long for a push. But I would need to see us clear this wick high first before doing so. Hindmost, Nico, for what it's worth, ChatGPT loves your structure of starting with Take Profit Trader and scaling horizontally with Apex. It literally suggested that exact game plan without me even mentioning it. It makes sense. It makes sense. If you guys haven't heard what I mean by that, what I mean is, since Take Profit Trader lets you take daily payouts once you're above the buffer, I think the best way to go about this, assuming you're going to start with Take Profit Trader and Apex, which I prefer, maybe before you have an edge, maybe you should try the Apex evals. But if you think like you have a reasonable expected value here in your trading, Start with Take Profit Trader, get a pro account or 2 or 3 or 5, get to the point where you can take daily payouts, and then guess what? You're paying your bills with the daily payouts from Take Profit Trader. You're technically at that point a full-time trader, and now it's time to just make as much money as you fucking can. Then you go to Apex and scale horizontally to 10, 15, 20 accounts, and now you have 3 to 5 Take Profit Pros that are kind of paying your way while you scale and paying for the scaling potentially while you're scaling at Apex, which doesn't let you take daily payouts, but you can take bigger payouts. To me, that's like the only way to do this, especially if you're somebody who's trying to bootstrap going full time, which is a lot of people. A lot of you guys are probably in that boat. Do it that way, I think. That makes the most sense. I mean, really, guys, like with the opportunity, I don't think it's that unreasonable that you could go full time with some Take Profit Pro accounts and pay your way, assuming your expenses aren't $45,000 a week or something. If your expenses are reasonable, you should be able to pay your way even with a small edge at Take Profit with the daily payouts, and then scale at Apex and then take it as big as you can. Obviously, goal 1 is to cover yourself so you can do this full time. Then goal number 2 is to scale it as big as you can while the opportunity's here. And then, by the way, you're in a position where, everyone's terrified. Oh, I don't want to start trading prop because what if it's not around? What if it gets regulated? Okay? It's not regulated, right? Well, it's heavily regulated, which is a good thing, but it's legal, right? It's not like prop trading is outlawed. It's a huge opportunity. Take advantage of it. Put yourself in a position where if it does ever fall off the face of the planet and they decide to bring down the hammer and say prop trading is immoral, which I disagree with. I just think it's an awesome opportunity for all of us. And it benefits both sides. The company makes money, you're given opportunity. But if it does ever go away, you'll be in a position where it's like, doesn't matter. I can trade, if I want, I can just trade personal. In a lot of ways, I think trading prop, if you're a profitable trader, is better than trading personal. But if it ever goes away, you want to be in a position where you have cash to trade personal so you can keep trading full time. But right now, the opportunity's here, man. Take it. Well, the bulls are kind of struggling here with this little flat top, aren't they? Again, for me, if we can break through this wick high and get a clean bull closing sequence, all of a sudden I'm getting long. Come on, bulls, take it through the high. I'd love to see this turn into a hard trend market upside. We're getting closer. It's just... I don't know if we're really there yet. We haven't seen... We're still seeing a lot of intraday activity that looks to me like the market is still holding on to that range mentality a little bit. Like this. We're testing the flat top and the bulls are just... They're trying, but the bears are like, I don't know about this. Lost pennies, 11,000 plus on one trade. Nice. Nice hit. Good work. All right, Trump is talking now. See if we get a few headlines here. If you guys haven't yet, please hit like on the stream. It really appreciate it. It helps out tremendously. And it keeps it free. Win-win. Here we go. Let's see here. All right, bulls, break us above 824. And then maybe we can get a little bit off to the races here. Right. Okay, Bear's pulling us back inside of this channel here. Back inside of that flat top. Now, this is one of those scenarios. This is kind of a... It can be a tough call to make, because if we see a bear bar that closes like here, well, more like here, below these 3 wicks, right? I start thinking, I should probably get short, and I might for a scalp, but getting short for a big swing can turn into this. Can turn into an ascending channel with the 20 EMA right here. So I'd be getting short with 8 points of room ahead of a very clear potential hang-up. I'm not huge on it. We got to think about it. Yeah, Clark, ATR is at about 20 here on the 5-minute chart. It's not great. It's manageable, but it's not great. What a beautiful little scalp right here, though, huh? These are the kind of scalps that I like. The ones that work, right? Right here. Beautiful close. You have the 20 EMA. Risk is manageable. It's something we're looking at 30 points-ish. Above this wick. Nice, clean close. 20 EMAs pulling upside. You know people are watching it. Buy the rollover, and it pushes. These are the ones where you take it and you're like, you know, yeah, there was a risk of this being a thing, right? But I'm willing to challenge that. You take it on, you just start looking for this kind of thing. And the more you take these, and the more often you're like, that was just a beauty. Sometimes they won't work. A lot of times they will work. And you start looking for stuff like this all over the place. I like that trade a lot. Yeah, it happened to work, but you know what? I like it regardless. Lord of Fuse passed the first 50K eval. Let's go. Let's go. Come Monday, you're funded, baby. Good work. Not getting any headlines coming from Trump, at least that are coming through my news feed. All right, good. Trump is done talking. Good. Have a good one, Lurt. Yeah, the 2-minute here shows this really well. I mean, we're kind of back in a sideways trading range. You gotta be careful. These little trading ranges. I mean, shit, this whole range is 11 points wide. Yeah, 12 points wide. Gotta be careful. Someone was asking earlier, what is a tight range? This is a tight range. Gotta let it break and then start hitting the brake. Yeah, Dominic, this is a very low volatility little channel here. I mean, look, the ATR is tanking, but really, look, this is why I have the range of each bar laid over the ATR, because this tells a new story. At these last, what, 6 bars? We're between 10 and at very best 18. But 5 out of the last 6 bars were between 10 and 14 points on the range per bar. That's really, really tight. Gotta be careful. You don't want to get chopped up and give away all your good trades trying to trade a shitty little channel like this. Be careful. All right, there's an attempt at a break. Quick wick. Nice little bear push here. Now the question becomes, okay, do we see a curl and we backfill the entire wedge? Or does this turn into an ascending channel that ends up breaking that flat top harder on the next attempt and we bounce off the 20 EMA here? That's the question. Hey, Raul, that's okay. Lost a funded account yesterday, just passed an eval today, starting back on the train Monday morning. Write out your business model, you know? Maybe you already have one. Say, you know, on average, the average account, some accounts are going to look way different than others. Some accounts are going to take tons of payouts, and it's going to be a monster. Some accounts are going to blow relatively quickly, because you'll just hit that losing streak shortly after you get it funded, right? Something that I've never talked about on stream, by the way, is with that business model, I do think it's really important What a lot of people do is they'll trade 20 Apex evals at the same time, get them all passed same day, and just get it out of the way. Fine, you can do that. What I think is better to even out the equity curve of money coming in via payouts, assuming, you know, I still stand by the start with take profit, then move to Apex. But let's talk Apex for a second. I think that's kind of silly, because if you hit that losing streak, all the balances of all 20 accounts are going to be relatively similar. So you might blow all 20 or 15 out of 20 on the same day if you hit that losing streak. What I think makes more sense is trade an eval like each afternoon, or maybe trade 3 to 5 evals in an afternoon, and then, you know, 3 days later, a week later, a month later, trade 3 or 5 more. Or you can trade 1 per afternoon while they're running a sale or something. Or I should say, try to get 1 funded account per afternoon. And then what you end up with is you end up with 5, 10, 15, 20 Apex accounts, all with different starting points. So if you hit losing streaks, if you end up blowing a few accounts, you're not blowing all of them at once, because they all started at different points. Doesn't that make sense? So it's going to even out the equity curve over time. You're not going to have a month, ideally, unless something crazy happens, where you blow all 20, and now it's like, oh shit, I don't know how am I going to pay my bills this month. You even things out. I think that's the smarter way to go, and it's also going to even out your psychology, because if you blow accounts, you're not blowing 18 out of 20, you're blowing 3. It's like a big deal, right? I'll just get those back in the next week. All right, here we go. Here's the test. We got a little test coming in for the 20 EMA on the 5. We got 2 questions here. Does this, well, 1 question with two potential answers. If you want to get more nuance, there's a million answers, but 2 essentially. Again, does this bounce and we break that flat top, turn this into a little ascending channel that turns into a bit of a short-lived, maybe soft bull trend? Essentially, do we bounce here and push through that flat top, or do we break this argument, which is lining up with the 20 EMA on the 5, by the way? Do we snap up that argument and turn this into a big backfill of this massive wedge, which this line would probably become irrelevant at that point? That's the question, right? I gotta tell you, I'd love to see that flat top break, man. By the way, this here is exactly why I took that scalp off. The potential for this to occur. When you get a really clear... Now, when you have a high of day that's like one really clear peak, I like to stop hunt those. When you have more of an argument for a flat top, I just think it's kind of a silly bet to say, I think this is going to break on this attempt, even though it's failed the last 3-4 attempts. Yes, sir. Machado, we 2 scalps in. I think 2. Yeah, 2 in so far. And we sit here so far on the day. Not quite the goal yet, but we're getting there. Trump's still at it, huh? Yeah, we're getting some headlines here or there. He said, the problem is the Fed guy. ATR is now down at 16. We're in the 16.6s. All right, guys, I'm going to drop the link in the chat to apply to work with me one-on-one. I'll text you from this phone here if you apply. Apex, they brought it back, man. It's 80% off, single day pass. You can pass today if you use code BIG and be funded on Monday, assuming you pass. And as is typical, at least as of late, Take Profit Trader is 30% off, no activation fee with the same code BIG. I do encourage you probably to start with Take Profit Trader. You can fund your way to trading full-time, daily payouts, and then scale up to 20 full-blown funded accounts with Apex. All right? All right, guys. Appreciate you joining me. I will see you Monday morning. Have a good weekend. Hey, your job this weekend is to not sit like a crackhead and say, I need to trade. Your job is to rest up so you are mentally and emotionally, psychologically fresh for Monday. Give yourself permission to chill over the weekend. There's nothing you can do about it. The market is closed, and you're probably not going to trade Sunday night. So Relax. Take it easy. Be fresh for Monday. All right, guys. See you then. Have a good one.